Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 27th of September. All right, now the dollar at 10-month highs. The yen weakens amid intervention watch. Right now, the BOJ, they've been talking around sort of 145, 150. I think they'd almost let it go through 150 because if it does peak above 150, it'll shoot up 300 or 400 points, and that's probably the time to jump in. But once again, it's a tricky one for the Bank of Japan, right? Because we are seeing a continual sort of dollar rally across the board, right? And that sort of puts the whole intervention story sort of in a box, right? The dollar index shooting up. Well, the dollars is sort of going up against everything, okay? And you see euro, sterling, Aussie and Kiwi. Well, they were already belted a few weeks ago, so they've already come down, but they're sort of trading sideways just at the moment. That's something that you'd think would catch up, right? But there's other things that are happening that don't sort of match up with what's going on. Now, if you just look at the market's been focusing on the US Treasury yields, right? And they have been slowly going a little bit higher. Now, you want to keep an eye on that. If anything, the dollar is the best of a bad bunch, right? The US numbers, the tiny numbers, keep coming out a little bit stronger. Well, they were, right? And if you look at the, so let me just come back to the chart just for a second. Just looking at the dollar index, right? You can see here from sort of Monday, Tuesday, it has sort of ratcheted up a bit. It's not like shooting away, but it is slowly going higher. Now, you look at, this is a little bit sort of contradictory because you look at the numbers from yesterday, right? You got the new home sales units were down, okay, lower than forecast, not by much. The change, 8.7%, minus 8.7%. I think previously it was 8%. If anything, there's a slight little uptick in the Case-Shiller numbers, and the home prices were slightly up as well. So, like mixed data, if anything, the new home sales change, minus 8.7%, that's got to be a little bit telling. And the other part was, sorry, right in the middle there, is the consumer confidence numbers. They are starting to plummet. Now, with all the unrest, the talk of higher interest rates, you know what? This is exactly what the Fed were targeting. They want the consumers to like be nervous, right? Stop buying, let inflation drop, and that's sort of happening. So will they need to raise rates? They may not need to if the economy and the people in it start to react accordingly. And that means stop buying, the numbers start to drop off automatically, right? So that's where we are. Now, you come into today's trading, right? So we're looking for some key events, and it's very hard to fight the stronger dollar at the moment. Now, the monthly CPI indicator in the Aussie, okay, a key aspect of the, obviously the RBA rate decision, 5.2% is the expected. Now, anything above that, it's going to put upward pressure on the Aussie. What I would see as a better trading opportunity is a number, if I just come back to News Squawk, actually, just scroll down, like a softer number, right? That goes with a strong US dollar, right? Or you might want to start focusing on the, the Aussie crosses, okay? Previously 4.9, they're expecting an uptick. Oil prices up. That's going to have and that's a big, oil is a big chunk of the basket of CPI, makes up the CPI. So just be aware of that. So the chance for a lower number, it's probably not there, but just be aware, a number under 4.9 or 4.8, anything like that should work well for a move down in the Aussie dollar, right? Because it's sitting on a pretty fickle, weak support line. The support in the Aussie is around 63.60. I just bring you over there, maybe show you what I'm looking at. Okay, so there's this short-term support trend line. You can see it sort of hit a few times, but really the last one there is around 63.70, right? So weaker numbers supports a lower Aussie. If we did get some sort of surprise big uptick in the Aussie, well, it's probably going to come back and test this level, but it's not going to go far topside. Not while the US dollar is sort of walking around with an angry head on. Okay, so that's where we are. Now, as I said, like today, you come over to the numbers today. This is where the bigger numbers can come into play. I'd say the durable goods number, okay, is a sort of second tier number, right? Pretty solid. Historically, it's got a lot of meaning and a lot of structure to how the central bank sort of manages things. So consensus is minus 0.5. previous minus 5.2, right? This is a number that we need to pay attention to. We've had, like, the home sales numbers are like tier 3, right? So they don't really come in and knock things around, but the durable goods number has the ability to do so, right? And if I just scroll down here, to get the data, you got the expectation here, minus 0.5. This is the key part for me, is the range, right? This is where you see a bigger move if it's outside the range. So minus 0.5, this is a pretty big range, right? Plus 2% to minus 2.6%. So just keep an eye on that as we go through the trade day today. Obviously, North America will be active around this, and that's where we may see things come into play. Now, a number stronger than minus 0.5, it's going to go towards, obviously, a stronger US dollar, and that's what we're seeing at the moment. But I'd like to see, those home sales numbers that were rolling over yesterday, I think a minus 1% or worse, then what that does is it turns around the story on the Fed, right? They'll sell dollars. And you know what? When we're looking at the markets right now, if you did see, it has to be a significant variation. But if we do see that, then there's a big scope here for it to come back down towards 105. Will it do it in one day? Well, it would if it was like minus 3 or 4%. But is that a chance? I don't think so, right? But what you're going to see is a lot more free-flowing moves, because the support and resistance lines aren't exactly close, right? 170 points for euro, 150 for sterling. Where we go there, like 150 for dollar Swiss. There's room for these things to move. It's going to get a little bit loose because there's no sort of levels around. And that's what we've got to really sort of pay attention to. Outside of that, like if you do have meta stock, right, make sure, or you've got access to some rates here, right? The yields have just updated here. They're slightly lower. Well, the 2-year anyway. Just looking at the risk appetite at the moment, it's a bit of a risk-on day so far as we come into the Asian session. Are we seeing that across the majors? A little bit. Sterling Aussie down. Okay, the dollar up against Swiss yen CAD. Now, this yen, as I said, about the Japanese, the BOJ intervention, I just don't think it's on the cards just at the moment, right? Because they are fighting a strong dollar. What they'll do is they'll end up selling. It'll just hardly move. The market's waiting for it, but I just don't think the timing's right just yet. So keep an eye on your main markets, right? Intraday stuff. When you look through the various components, try and isolate the pairs that have the best technical setups. And when you come into the calendars, make sure you're focusing on where the best trading opportunities are. Thursday and Friday are definitely by far the best trading days. So don't get suckered into a trade just because you're bored, right? I know the durable goods is worth looking at. Will it be a tradable event? You don't know until the numbers come out. But I do know that with all the data coming out Thursday, Friday, we have much better, sort of more important things that give us clearer ideas around what's happening with direction on the dollar. Okay, jobless claims, the second or third number there in the home sales, Fed Chairman Powell speaking, GDP numbers, etc. So hang in there. Right, this is a little bit of I think everyone's scratching their head at the moment, and I'm not just talking you folks at home. I'm talking about all the guys in the banks are like, what's going on? The Fed's talking tough on rates, but, things aren't going that gangbuster, right? So I think there's still only a 40% chance of a hike in November or along those lines. So maybe they're talking tough, that jawboning is doing its job, and we may see the dollar just slowly roll over. But I tell you what, you look at the charts, it's a bit of a rush to the bottom because you got weak euro, sterling, Aussie, Kiwi, CAD. Everything sort of like was looking great, like the inflation was coming down. It stopped. It started going up again. Central banks are all over the shop, and that's creating this sort of uncertain sort of trading or direction. If anything, I mean, you cannot deny, and this is just to finish on, you cannot deny the direction of the dollar and of the expected and that pressure from the Fed, right? These equity markets, the Dow Jones, the S&P, and the NASDAQ, they are getting beaten up for good reason, because the market is expecting higher rates, right? Or a tighter policy to choke these markets. And if anything, to me, it's a great clean out on the equity markets. If in actual fact, the NASDAQ could go down another 3,000 points. That would be even more refreshing. All right, guys, that's it for me. The tricky markets, as I said, focus on your technicals, right? Like even gold here. Around these technical levels, you are getting good entries. Same here on oil. Like just focus on your technical setups. Look for a bit of momentum or direction, and that's where your trading opportunity will evolve from. And most importantly, keep an eye on those US numbers because the dollar at the moment is the driver. So keep an eye on those key releases. All right, guys, have a good one. All the best. Cheerio.